are you missing too many good trades? So we're going to talk about make sure you don't do that. So how to consistently get into more good trades without more screen time, because more good trades often means more symbols, strategies, timeframes, etc. All right. So, and today, besides getting into detail or how to get into more good trades, I'm going to give you completely free the detailed rules of a strategy that would have averaged 50% a year each year for the last 8 years without the massive drawdowns. So you'll get the symbol, what market it is. You probably already have a big guess, like where else can you get 50% a year for the last 8 years? Not too many asset classes have been able to perform that. The key is what's in green, which is without the massive drawdowns. So you maybe not capture all of the upside by trading it, but these time periods here, this is an equity curve. So this is the returns of the strategy, not the underlying asset. So these flat drifting down periods were like crashes and bear markets in this asset. So today we're going to talk about how to be more consistently profitable by adding automated trading, just like the top firms. The prop firm environment has changed over the decades, from tape reading to signalized systems to technical analysis, and now to automation and algorithmic systems, trading tens to hundreds to thousands, or looking at the entire all markets at once. And you can do that in the next 10 to 30 days, and no technical experience is required. This is not for people who already know programming and coding, and say, hey, you can translate all those skills you learned over to this in 10 to 30 days. This is for people who know trading, and that's all you know. You don't know anything about automation and coding or anything like that. If you know trading, you can convert to automation in 10 to 30 days. And when I say convert, add automation to your trading, unless you're just been burning through money for a long time and you're ready for a significant change, then you may want to just completely convert. So if you don't know me, my name is Adrian Falde. I think you all do, though, because you're on my email list, unless you accidentally got on it somehow. But 15 years trading for hedge funds and prop firms, some award-winning system strategies, won competitions, etc. And I've helped a lot of traders for a long time. And the most fun thing here is my little crew that's continued to grow over the years. So 3 little kids, amazing wife. We're having a fun time. We just did a little Disney trip for their spring, or whatever I said, spring break, Christmas break. We just got back from that, and I'm just very glad they're back in school today. So that's one reason we're doing this meeting. Kids are back in school, and I'm ready to jump in. I feel like today's the first day of the year. So it's the 6th, but today feels like New Year's Day because the kids went back to school. So my background, I had a very hard start. I lost over 100,000 in the first year of trading. That's exactly where I was sitting and exactly what my world looked like during that time. So I had another guy I was trading with. We were funded by an investor, and I just was very good at burning up money. I was over trading. I had no risk control. I was constantly switching from one idea to the next. I was frustrated, very angry, depressed, unhealthy. I was just angry and just really in a bad spot all weekend long, every weekend, because Friday would come and I had lost even more money that week. And over the weekend, it's just like I was desperate. Like, when is the market going to open? I'm going to, I have to turn this thing around. I'm going to make this work. And then Monday would come, and another week of that. And it was just absolutely terrible. And I was ready to quit. And it just didn't really seem like it was working. Plus, on top of all that, I was broke, in debt, and wanting to start a family. So this is 15 years ago. My oldest is 11. And we were like, how am I supposed to start a family and get going if I'm broke, in debt? When I say in debt, by the way, at that time when I was doing this, just getting started, was when we were still in a real estate depression in Florida, and I owed over 200, maybe like 250,000 more than the properties I had were worth. So I had a couple investment properties. They were completely upside down. So I wasn't just, I had no cash. I owed hundreds of thousands of dollars, had no cash, and I have a young wife. We were both young, basically, and we're like, well, got to do something different. So I had to make a turn. So I decided, well, this whole thing I've been doing is based on I fire up sink or swim, and I jump in and I look around and I'm watching the news and I'm watching this and that. And I'm like chasing. I'm just jumping around and chasing and trying to do different things all the time. I'd have these big grand ideas and I would trade them and it wouldn't work and I would switch to something else. So I finally decided my last attempt would be rules-based systems. And I don't even remember what the trigger was. I wish I remember like that moment, but I do think it was just really, you keep hearing about it. You keep hearing about systems and algos and automation and things like that. And it was in the background, but it wasn't something I thought I could do or knew how to do. And I just decided, and I didn't do automation right away. I just did rules-based systems only. So I said, my last attempt is I'm going to quit thinking about what I should do every single day and minute. And I'm going to just switch completely over to, I will just follow a set of rules. And that's it. I'm like going to mentally check out. I'm going to work hard and find some systems that I think I like. And I'm going to follow those rules and just go with that. And I'm going to stop guessing and predicting and trying to do different things. After that, if that failed too, I was just going to go back to real estate, which is just like the worst existence for me, my personality, my temperament, who I am. It's not good. I didn't like it. So I didn't like selling. I didn't like driving around town. I sold commercial real estate, which is still better than selling houses because you had banker's hours. But I just didn't really enjoy that. And I thought the upside was too limited compared to trading. And by doing this, I instantly became profitable because I like when you close all your positions and you only take positions moving forward that have an edge, and you use a couple of different systems that are proven, and you just follow the rules. It like what you were doing last week has no bearing on what happens this week. So I immediately jumped from the results and the input and the output of what I was doing before, which was chaotic and nonsense, to some good, clean, simple edges, and it instantly worked. And you know what? What's interesting is great. I was glad. I was like, hey, I'm actually making money trading. Look at this. Maybe there's hope. But there's a little like burst of the bubble where you realize, what I dreamt trading would be like, which was like, I'm going to just read headlines and read articles and research and see what's going on in the world. And I'm going to be able to, compete in the marketplace, and I will be the one to be profitable. I no longer got to be the one who like was pulling money out of the market, right? And winning. Okay. It was the system. The systems were winning. Systems I didn't even design were winning. And it's like, so really, I just was the person making sure it was happening. I just became like a middle manager, but it worked. I was actually able to be profitable trading. So from there, I learned to back test, manual, automation, etc., optimized, all that. Okay. And from there, developed strategies that won competitions, and I raised millions from firms and investors. That was the fast version of, going from making the turn to being funded and having good returns there. There's a lot of things in the works right now, but the one thing I want to share with you today, after this is like, I'm going to tell you about this later. The first thing I'm going to do is I'm going to tell you all about a strategy, show you all the back tests, give you the rules, show you how to set up the chart, all that. That's happening next. But after that's done, I'm excited to tell you about one-on-one automated trading consulting. If you're the type of person that says, I don't want to have to buy a course and watch one video after another and do all the work, I would rather just pay somebody to do it with me. Like, let's hop on a meeting like this. You pull up your screen and I'll tell you where to click and point, and we'll get it done. All right. But we'll do that in a minute. First, here's a simple strategy that captures the biggest moves in the fastest moving stocks and gets you out of the way during extended bear markets and crashes. It's the one that generated this equity curve that I'll tell you all about in a minute. I call the strategy the RSI plus. Why? Because I'm not very creative. So anyways, it's an RSI based system, but there's a few little features added to it. So I added a plus. I do think the logo is fun, but other than that. So here are the rules. So if you want to take a screenshot, and you can go back and find it, you write that down or just take a picture. I'll read it out so you can document it somehow while we're on this slide. The core entry is when the RSI crosses above 50, you buy. And when RSI crosses below 50, you sell. That's the core of it, which is a modification of RSI, which is normally an oscillator. It's normally an overbought, oversold indicator, or like when crossing from oversold to, out of that back into neutral or whatever, above 30 or 20, whatever you're using. That could be a buy. It's gonna be a little bit higher probability, but it's more volatile. I've tested countless versions of this. And when I'm testing and I say what works most often across the most markets and the most timeframes, most intervals, it's this one. RSI above 50 and below 50 is a buy and sell signal. Lots of other stuff works, lots of other stuff. But this is the one where I'm not buying dips and hoping it doesn't fall out the bottom underneath that. I'm not buying down low, which is very volatile, where you get a lot of like, where it's called like a hook. I've heard it called where market's coming down, it starts the hook a little bit and then just hooks you and drags you down even farther. We're really waiting for that further confirmation. Here's the pluses. The pluses are not like the benefit pluses, but like why it's called plus, because there's other things added to it. Only trade above a long-term moving average. I use 200 almost all the time. That's basically what I use, a 200 bar moving average. And it doesn't matter if that is hourly or daily or 30-minute or whatever time frame you're using. It's just the bar interval. And another plus, another additional feature is to use a 1-bar breakout to confirm entry. So just because it closed, the indicator closed above the 50 level, your entry would actually to put a buy stop order at the high of the previous bar. And if that doesn't trigger, but the RSI is still above 50, so like the next bar is small or it dips down or we sell off, but you're still above 50, then you put the buy stop order above the previous bar high. So it's not the highest high since the signal. It's anytime it's breaking the high of the previous closed bar is the buy. So that can happen on the next bar or 2 or 3 or 5 bars later and go from there. Also, you can use a 1-bar breakdown to confirm the exit. When I say can, they're not required. I do think, what I have seen is that the results are better with these two confirmations. So if it crosses below 50, you don't just immediately get out. You have a stop loss placed at the low of that bar, because there's a lot of times you're just dancing around the middle and you just, got out, got in, got out, and it's not even breaking out. It's just like getting a smaller and smaller range. And you'll see that on the chart, I think, in some of our examples. And then volatility sizing and or dollar sizing. So not just 100 shares or 500 shares, and it's volatility sizing, which uses standard deviation. So if the market's super volatile, the number of shares will be smaller, and your expected amount of volatility, positive and negative returns on a bar-to-bar basis, reflects the fact that the market's super volatile. Or if it's calmer, it'll buy more shares and again experience that fluctuation very similar. Other guidelines, high beta, okay, high beta stocks. Think NVIDIA, which by the way, I think is having it's back in action too. So when I first wrote this up, I was like, well, NVIDIA was doing good, and now it's not. Well, actually, it's doing pretty good again. Think NVIDIA, not SPY. SPY works. You just don't make a lot of money. So even though SPY works, it just doesn't make very much. All right. 30-minute time frame up to weekly, which is a huge range. But what it does not mean is that you're doing a 5-minute chart or a 2-minute chart. And I think I talk about this more later, but I'll just say it now because it's so important that slippage, whipsaw, choppiness, all that, when you go below 30-minute, especially on a lower price stock, the theory of the signals versus where you actually get filled and all those small trades that you're making, every trade is going to be a smaller average win. The losses and the average win compared to your slippage on every single trade, it really eats into it. So if you add slippage to, say you do a $5 stock on a 5-minute chart, the back test in theory could look great. But once you add slippage, either to the back test or in the real world, you'll be just chewing up money left and right. Okay, 30 minutes, the fastest time frame, the shortest interval. I don't have anything running on weekly, but weekly does work. If you really want to slow it down and take it easy, you can do weekly. I prefer 60-minute to daily. So I use 60, 90, 120, 165 and daily. And there's no magic. I'm not like, well, 165 worked and 90 didn't. They all should be fine. The issue is going to be the price of the stock and the amount of movement I expect. So if it's a very, very fast moving stock at a higher price, like $100, $500 a share, or higher, whatever, like in that 100+ territory, I can go down to a 30 or 60-minute chart and not worry about slippage being a huge factor. But if it's a lower price, like a $20 stock, and it's not super high beta, like it moves, but not massively, that's a daily. I'm not doing anything less than daily. So how to set up the charts, you put the RSI on with a 14-bar look back, and you set the overbought, oversold to 50. You set them both to 50, so you have a line across the middle, not at the top and bottom. And then you add a simple moving average to the chart. So quick look, if you're in TradeStation, for example, there's the indicator, and then you just change these settings here to 50. And that's that. And then you add the simple moving average, and I do 200 bars on that. So example of the confirmation. So here, the RSI crossed above 50. You can barely see it, but it did. That's why there's a color change. So it crossed above 50 on this bar. Actually, kind of hard to see it that way. I think it's this red bar here, but it didn't cross above. And even this one, it didn't cross above. And then it closed back below. The RSI closed back below, and then the signal's off. There's no entry at all. So it avoids a whipsaw there. And then on the next time it crosses above, it buys a break of this high, which is actually the open of the next bar because it's a stop order. It's going to be that price or higher. So it actually takes it right at the open. And then here it crosses below, probably on this bar actually, but it kind of drifted up again. And then it sold actually on the break of this bar right here, which is going to be almost exactly the same point, but actually a couple pennies higher. So that's what it looks like. You got the 200 moving average. The signal happened above it. There was a breakout. It bought. There wasn't a breakout here, so it didn't buy. It did this one though. And then here has a confirmed exit. Okay, so that's what it looks like. The moving average filter takes you like, this is NVIDIA. Okay, so this is a stock that grows a lot or has grown a lot and can grow a lot more still. We just don't know when. We don't know if there's going to be a 60 or 80% correction and sit around for a while and then have a big move again. We don't know that. So that's why I'd rather use a confirmation, use a signal, a valid signal. And so here, once we're below the 200, there's no signals, no trades, I mean. So here, across above, cross back below, probably a whipsaw. Cross back above, really sell back down, would have been a loss. Here, loss, here, a loss. And then here, you would have caught the win. Kind of, let's see, buy here and sell here. It would have been a very small win. So you would have had 3 losses and a small win in there, but there are no trades happening because you're under the 200 moving average. And that's times when those can just, stuff that's grown hundreds and hundreds of % over several years can get back below the 200 and just nosedive for 2 years, settle out, and then turn back up or whatever, go down for 6 months. And they're just off. I'm not using any capital on those. And what it does is I'd rather go for the stuff that is moving, that's going the right direction, that is above the 200 moving average, and just stay away from those names while they're having their correction. So we're going to go through, here's a bunch of names that I'm going to show you equity curves on just to show you like the variety. This is why, like, I don't want to just trade the Qs on this, like literally QQQ as a single instrument and just say, oh, I'll just do the ETF. I want to do a whole bunch of individual names. I do have Qs thrown in there. I want to do a whole bunch of individual names because you're going to see the peaks and the troughs and the growth times of the returns are all at different times. And I didn't have time for this one, but I'll do it in the future, where when you combine them all together, you get a smoother result and higher returns than if you do just one ETF. So we're going to run through these. So here's Apple. Apple always does a great job. This is a only a 10-year look because it's a 60-minute chart. All these are 60-minute. And I did not even look at anything else. I didn't look at daily or 90 to collect this. I just said, let's just do 60 minutes. And every rule is exactly the same. There are no tweaks, changes, or optimizations to each individual name. Okay. So Apple, ABBV. little choppier. Also, remember, these are $10,000 max per trade. But volatility sizing, I am almost certain is in there. So I think I have a volatility limit. So if things get super volatile, it'll bring the size down, but it's $10,000 available allocation is the max amount of money. And then with the volatility sizing, which I didn't have in the rules. So I'm going to have to explain that at some point. So $10,000 per trade, though, is what we're looking at. So that's 1580 or 8. Amazon, smooth. And remember, there's times when these stocks drop a lot, and you don't see them in the equity curve because we're not in it. This is trade by trade results. If I used a calendar approach, you would see the flat periods, and that's times when the stock's just plummeting. You're not trading it, and then it's moving back up. Then there are plenty of whipsaws, obviously. Like this isn't necessarily the stock going down. That could be the stock going sideways in that. App is a great one. High return, still working, been working lately. Also, yes, remember we're looking at like that last one. Let me go back. See, like the return is in here. Same look back period. The highest returns are here. Less returns lately with Amazon. And then what's going on? Lower, not a lot going on back then when Amazon was growing, but jumps now. So that's why I want to look at lots of individual names. CLS, Coinbase, CrowdStrike, Ethereum, ETF. FICO's great. I think there's another one. That was a really great trade. It was one of those where I'm like, FICO? Like, what is going on? So it had a good back test, like decent back test as I run through lots and lots of different names and look like what's done pretty good in the past. Sometimes I use AI and just say, give me a list of names where, there's expectations of growth in the future based on economic trends and all that. And it came up. I'm like, FICO? Okay, whatever. Had some really good trades in that lately. And it's just very interesting. GBTC, so Bitcoin ETF, Robinhood. Also, over the years, I've learned like, hey, this is doing great, but oh man, it wasn't good back there. Here's the deal, like it wasn't. Oh, and this is pretty new, actually. You know what? This is really. I've talked about this in the years. Maybe you recall from years past. This is only a 3-year look back where all the other charts are 10. Whenever you zoom in on a shorter period of time, the ups and downs, you're like, oh, that's way too volatile. Everything. Look at the numbers are so small. Like this is a $2,000 drawdown. Like here, that's about a $2,000 drawdown too. But if I zoomed in on this, just this right here, you would say, oh man, it's so much drawdown and just a small return. Well, because I zoomed into one period of time. Like if I only looked at the last 3 years and you zoom in on it, I've used the illustration of like a tennis ball. So a tennis ball 100 feet away, you would say that looks smooth, right? Especially if you have bad vision, it would just be like a really smooth little blob. But when you put a tennis ball under a microscope, it looks like a crazy foreign forest planet. Like there's just like these scraggly things going all over the place, and it's a really weird thing. I forget where I've seen it, but it's like a whole bunch of objects under a microscope, and you're supposed to guess what they are, and it's just the wildest thing when you zoom in that close. So that's what's going on Hood. Okay, it's only a 3-year back test, and so it looks volatile, but it's actually pretty solid. And I added it to my trading because it's a disruptive stock. It's returned a lot on capital because it has some high growth. So it's in my basket, and I don't need a 10-year back test. If I understand the strategy's solid, if this thing grows a lot, I'm going to get a lot out of it. Microsoft's been lower beta, but I feel like, yes, you're allowed to use feelings in systems trading. So I'm like, let's run with it. What's the worst? What's the worst? I feel like I can make a little bit with some choppiness, or like it can just surprise everyone and take off. I'll do that. NVIDIA, I had these trades in NVIDIA, and again, I was like, it's just comes from research. What's trending or what's expected to benefit from things, and it's like NVIDIA is basically like the backbone of AI and crypto with the specific processing that they provide. And it's like, okay, so I just threw it in my basket, over here. Like there's all the systems running. you know, so I just opened up a chart, threw NVIDIA on it and let it go. And then I just had these like, I'm just like, what is this? You know, like, did I put too much size on? Like, why am I up so much in this? No, it just started taking off and I'm in it. And like days before like the headlines are on, like I was in a trade and the thing just kept going and going and going. And then like, you know, it's like always the sign, maybe you should sell something when somebody that you barely know, they even follow the markets and you're like, did you see NVIDIA? And you're like, I didn't even know you traded or looked at stocks. Like, yeah, I'm in it, but now I want to be out of it. But I let it go. I let the system run. Palantir, I should go faster through these. Qs, look, you're like, wow, it's super smooth. Not really high return though. It's a 10-year back test, decent return, very good. You know, but you're isolated to just that performance. And, you know, there's stuff that's not working and stuff that's trending down at the same time, holding it back. So it's a little bit lower beta, even though as far as an ETF goes, it is higher beta than SPY. Reddit is a very short, that's just less than a year in trading. And what's cool is like you can have an IPO. It's like as soon as you have 200 hours, 200 hourly bars available, you have the trend in play. Um, you have the whole system can run. And so like you don't have to sit around and wait for like a 5-year back test to develop before you decide to trade it because you have a solid system that you know what it works on and what it doesn't work on. And like if it's trending up and I have a signal, I'll do it. And this thing could keep going. So that's a fun one where it's just IPO'd last year and doing pretty well. Tesla, really, really high return there, you see, hundreds of percent. Vistra, I think that was. So he's like, great, really simple, right? Moving average, RSI crossover, buy on a breakout, etc. Okay, so why are good systems hard to follow manually? If you agree this is a good system, I think it is. Why is it hard to follow manually? Well, here's why. Here's Bitcoin. I don't even have the dates on here. I just went and found some time frame where there's a bunch of losses in a row. And like, if you're doing this manually, this is hourly bars. If you're doing this manually and you're doing it on I don't know, 20, 50 names, and you're watching every single hour, you're having to go check, is there a signal or not, or see if you got an alert or anything, and then place the buy order. And then this, so you got one, so we'll just start here, like big spike up. Also, that big spike up, that's like your hand gets real heavy, right? Like it's hard to click the buy button after a giant bar like that. And so you hit buy, and then what spikes up, goes down, gaps down, goes, you finally sell it. And that's just like frustrating. You're like, yeah, I shouldn't have bought that, you know? But if you just let the system do it, it's not so frustrating. Anyways, 1, 2, 3, 4, 5, 6, 7, 8, 9. So about 18 days, 15 days of this. Buy, close for loss, buy, close for loss, buy, close for loss, buy, close for loss. And another one, and another one. And you're like, what am I doing this for? How many more? I mean, do you really think you're going to keep trading that? Like, I struggle to do that. That gets really frustrating when you're like, man, what am I? What am this Bitcoin is just chopping me up and everything. But if you have an automated system running, these are pretty small. Like we're in a pretty tight range. You know, yeah, there are a bunch of attempts, and you're like, I thought this was a good strategy. I thought, you know, the win rate should be maybe it's not a high win rate system as far as like how many trades ended profits, but it's like 100% of the trades I've taken over the last 2 weeks have lost. This system must be broken, right? All these thoughts run through your head. Well, here's what happens next. So what we just looked at is in this bluish box, blurple colored box here. I don't know why I chose that color, but there it is. And then here are the next 3 trades. This is what lower probability trading looks like. When I say lower probability, it means when I take this trade, there's a less than 45, less than 40% chance, less than 35 sometimes percent chance that it will close, this one trade will close out profitably. But if it does continue, it could go on. One trade can last longer than these, how many? 1, 2, 3, 4, 5, 6 trades. One trade can last longer than 6 trades, all right? So when I talk about probability in my head, I'm not concerned about the like line item, like this trade lost, this trade lost, this trade lost, this trade won. I'm looking more at like a time frame. I spent this much time in winning trades. And there, look, I'm not even in a trade here. I spent the accumulated period of time in here in losing trades. And I didn't have to take the trades. I didn't have to go through the frustration of buy, sell, buy, sell. I let the system do it. But when I look at my screen over this couple month period of time, maybe is what it looks like. I'm going to say it's 2.5 months, maybe. I spent more of those 2.5 months looking at profitable trades on my screen, on my list of positions, because these were short-lived and small losses. And these are long-lived and larger wins. Okay. So continuing on, that is what we just looked at was these two together. And what happens even beyond that? More wins, small losses mixed in, etc. So if you hop in and you say, yeah, I'm all about this, and you hop in and you just happen to live through this first, and you get frustrated doing it manually and you kind of just forget about it, at what point do you feel like, oh man, I really missed out? Well, then you didn't get these, and then you're going to try later, maybe. And that's where you just don't have the consistency, in my opinion, and for most people, especially if you're going to try to do this across a whole list of stocks. So to reiterate, what is the goal of this strategy? The goal of the strategy isn't to have 80, 90% of your trades win. The goal isn't to try to win something every day. The goal of the strategy is to capture most of the upside in stuff that has potential for a lot of upside and avoid most of the downside. And the key word in both of these is most. You're not getting all of the upside, and you're not going to stay out of all of the downside, but you're going to capture most of the upside and avoid most of the downside. And here are those downsides I'm talking about. So again, looking at Bitcoin ETF, here are the massive drawdowns, 50% drawdown, trades back up, 50% drawdown, trades sideways, and another big drop. In fact, that might be 50% too, because it's just a small number. 25 would have to go to 12, and it looks like it's not far. So that's almost a 50% drop there too. 50% drops across here. And what happened? There's no trades, all right? The system's trading in here, and it stops trading and doesn't do, there's only one little trade in there, and it's trading. And then it stops in this period, but it's back and then trades here, and then it's out and doesn't trade anything in here. Look at all those signals it's not taking because it's using the filter, right? So beautiful. All right, we're capturing most of the upside. And also, by the way, it's like you were trading profitably up to here, it's sold off. The asset didn't even have to grow to new highs and grow. You're just out, and then you're taking it back up here. And that's now, even as a, I'm going to say 85, 90% bullish systems and strategies with some bearish components and income trades, etc. Since I'm mostly exposed to upside with the number one downside protection being exiting, automated exiting. That's my number one downside protection. My number two one is long UVXY. My number three one is call credit spreads, 0 days to expiration in SPY. So those are my bearish components. Plus, yes, I have gold as a long system. You could call that bonds, maybe, etc. But mostly going to cash and a couple of bearish strategies. So I don't need the market to grow as a primarily bullish trader. I just need to be able to capture upside moves and have a couple of bearish systems. So that equity curve I showed you a couple of times is the GBTC on RSI plus, $10,000 per trade. So no reinvestments, no compounding, no growth. So literally right here. So you trade from here to here, you've doubled your money here by this time right here. And you just, all that profit's sitting on the sidelines. If you were to buy it and hold, you would experience more growth. So here is a hypothetical look at putting every dollar back to work in this. So starting with $10,000 in there, it nearly gets to $1 million in profit by just allowing every dollar to get back to work. So that's RSI plus. by the way, it's hypothetical, not recommended, because when you put every dollar of profit back into a trading system, and you hit a big whipsaw period like this, like you got a lot of downside. I do like adding more, but I like to do it across the whole account. And as we've seen, like Amazon grew a lot, right? And then it kind of stopped growing, and then something else worked. I'd rather take the profits and distribute it across everything, rather than into the individual instrument. But it is fun to look at, and some of it would go back into this. Or you could just do it. You'd be like, I know what I want to be in, and I'm just going to go all out. Whatever. That's your choice. But it's certainly not a recommendation. RSI Plus can be fully automated. And after your platform and your account's open, your platform's installed, all the basics are set, which doesn't take long. A couple days to open an account, download the software, install it, etc. We can, if we work together one-on-one, we can set up and implement RSI Plus in one session, which is 1 hour together. I can say, here it is, install it, test it, here are all your settings. Here's how you're going to paper trade it for a couple of days. Here's how you switch to live. I can show you all that in one session. All right, so what about the downside? All of these strategies are bullish, and I mentioned some bearish stuff, and I forgot that I had this slide, but I get to tell you again. So number one is closing longs. You say, what about the downside? Number one is this system closes longs and gets out during extended bear markets and crashes. You're not gonna get rid of all downside. There's plenty of times you catch something and it sells off pretty hard before you can get out. That's part of trading, all right? But those extended long bear markets and crashes that just go on and on and on, you won't be involved, okay? You won't be in those. And then UVXY long. I'm not sure if RSI works on that. I have a different system that scales in and out of the trade. But it should be traded, not held. It does not work as a long position. So you can trade UVXY when it's like it's just really been going down for a while, and you can use technical analysis or some other signal to catch from down low and take spikes. I actually take it with a little more confirmation, and I do want better ways to get out. I have some stuff I've tested that look good, but that'll be for future sessions. I can tell you about those. Bearish options trades. So right now I do I'll show it actually to you. So here's the options trade. This is a back test of call credit spreads, 100% automated. So I have these running right now. I have a position on right now. It was fully automated this morning. SPY, 0 DTE. Entry, stops, limits are all automated. And it's had 400% annual return on individual trade risk, which is a highly, highly leveraged position, as you know. It does have stops, so you're not just taking it on the chin if you're absolutely wrong, so it gets out pretty quick. And it's just a little bit over at 50% win rate in this on a bearish system during a bull market. And it's a shorter back test because that's all the data that's available on the 0 DTE stuff. So now that we thankfully tested the sound earlier and it worked, if you can't hear them talking, you all have access. I'm not going to play this now because it's on the website. So if you haven't listened to these stories, you can go on edgenavigator.com and you can go down and find there's 4 little videos with the traders. What I had on here was actually edited so that's all shorter. But it's still like a 7-minute long video. I'm going to skip it. I'm not going to play it because you probably have already heard it, and I don't want to make you go through it again. So we're talking to 4 traders, so look for those on the website. So top 4 things automated trading does for you. It frees you to think bigger, and I think these are things you would capture and understand from the videos, those interviews. It frees you to think bigger. So you move from being the player on the field to being the head coach. And you're not like the owner of the team because you still have to be there and look at things. Like if you want to be the owner of the team, then you can hire somebody else to do this for you and still have all those advantages. But if you're doing automated trading on your own, instead of like the very tactical, like getting hit, like I'm thinking football because it's that time of year. Like taking damage, having a pretty short career time, you know, having the risk of being benched or traded or cut, all these different things. Like it's much more volatile to be a player, and it's much more physically exhausting to be the player on the field than to be the head coach who's thinking bigger and really just like choosing who, like, and having a whole bunch of different players out on the field running different plays. Okay. Number two is automation enables extensive diversification. Any number of symbols, strategies, time frames, all simultaneously. No matter how many you think you can handle manually, it will like wear you out. You'll have decision fatigue. You'll have maintenance fatigue. It'll just be hard work. It will be frustrating the more you add. And it gets really confusing when you're like, well, I'm going to do a 30-minute time frame on this stock, but a daily on this one. And then when it's not automated and you're like, you forgot to switch the time frame and you were looking at it and, oh, I was supposed to switch back to daily on this one, it gets pretty hard. Okay. But whatever you can handle manually, you can handle 100 times that with automation. Number three, I love this one. It creates emotional distance. Okay, I'm going to read this first and see if I have to elaborate. You're at arm's length from each trade. Okay, if you know what that means, like an arm's length transaction, like you're separated from it. The losses no longer feel like judgments of your skill. They're simply part of a well-designed process. So I see trades happen, and I'll see like a little red bar, and then I'll get a notification on my watch that says this stock was just sold. Like, okay, well, it took a little loss, but I didn't have to go like me do it and me think, man, I should have known not to take that trade. I'm just letting it work. I'm letting the system go through its process because it's a well-designed system. It's a well-designed process. And I don't feel like I should have known better. Like it's not like hurting me personally. A very powerful advantage. Number four, automation enforces and teaches discipline. The default is to follow the rules of the system. So if you do nothing but you have automated systems, the rules will be followed. Okay. If you use manual trading and you choose to do nothing, or you don't pay attention, or you're not looking, the default is inaction, no trade, hesitating, delaying an exit, or second guessing the strategy or the trade altogether, or the sizing, all these different things. So the default with automation is everything goes exactly as planned, versus the default with manual trading is all sorts of hurdles you have to overcome for every single trade. Bonus, those top four. Here's number five. Following systems helps train your discretionary skills. It's like training wheels. It's like you're watching your own account navigate the market. You're watching if you have 50 different symbols on, and you're seeing like, okay, the market's going down. But this trade didn't sell. It was like a little weak or whatever, but it wasn't as weak as the rest of the market, and the system kept it. And the market turned back up and it kept going. Like, wow, that's very interesting. Or like, oh, the market's really selling off. And then like, boom, this was the first one that started moving. The market was still kind of weak, but this stock started moving up. And so the system bought it. And then when the market turned up, this thing really led the charge. You're like, oh, okay, wow, I see how that works. Or like, hey, the market's really strong, but oh man, some stuff is starting to sell. Like, okay, the systems are like seeing the underlying weakness, that some things aren't participating anymore, and you're getting out of those. And you start to like experience the ebb and flow of the market, and it trains you to see that stuff maybe even a little sooner than a system would. And that would be your discretionary skills actually improving from that. So imagine this. You're out to lunch, you're looking up at a screen, and you see a stock is just absolutely screaming. And you're like, I know that stock. And they're just like, what's going on? The stock's up 8% today, this and that. And you're like, okay. So in the old days, and as a trader, your typical reaction is like, I'm going to check this out. Like, what's this stock all about? Do I watch it? Do I have any positions on, etc.? And as an automated trader, if you have like every possible stock that you can think of that has like is in play, is high beta, is like an opportunity, and you added it to your list, then you don't have to then go look at this stock chart of like, oh man, they're talking about it on CNBC, and it's up 8% today. I wonder if I should buy it or not. You're going to see, no, I got into it 3 days ago through automation, and I'm sitting on this as a win right now. And it's not something you saw coming or did. It's something you set up a long time ago and you let run, and now you can participate without having to check that stock every hour, day after day, for months to finally get into that position. It happened for you. Okay. So in a minute, I'm going to tell you about the one-on-one stuff. But really, like, where I'm trying to go next in all this is I want to build the next generation of automated stock, options, futures, and crypto trading software. And there's no time frame on that. That is just something I'm working toward. But as I see the opportunity and build relationships with developers, I want to be a part of. I don't want to say that I built it even necessarily. I would just like to be a part of it and make sure that it really is like professional grade and also designed to help people run managed accounts. So like if you have friends and family or advisory firm or anything like that, or a prop firm or hedge fund, but really like the separately managed account structure is what I prefer to do. I want to build it out that way so it's more professional, not retail. Raise $1 billion for automated trading strategies and allocate that. Sure, plenty for me, but also allocate that to automated traders around the world. Because there's a lot of really smart people that understand systems and all that, and they just don't have like a big nest egg of capital to work on, and they don't know how to raise money. So I think there's a huge opportunity for skilled traders and systems developers who can really build good systems and strategies to have the opportunity to be funded and not have to live in a certain area or even speak a certain language. So when I say for a limited time, like that's legit. I don't plan to offer this for a very long time to do one-on-one. So there's some reasons for that. So like, why is this limited time? So right now, there's a team building a custom platform for this to be done in a group environment. That's going to be a better experience than anything I've done before. So that's being built right now, but I don't know how long it's going to take. It could be 3 weeks, it could be 3 months, I don't know. But right now, I'm just kind of sitting back waiting for them to finish that. I'm waiting for an update to my FINRA registration. And then when that's in place, I'm going to be turning my attention back to raising capital, but I have to move my registration from one firm to another. So I'm just waiting for that right now. And then also doing this one-on-one allows me to get direct interactive feedback on what traders really need and how they experience this process when launching their automated trading portfolio. So really like going through the process with some more people is going to help me make it better and know like, this is what more people need. This is the sticking point that they go through. So doing that one-on-one is going to be the way. So this is the ugliest slide in the world because I just threw it on real quick, but it's also on the website. 1 hour, 5 hour, 10 hour. So the more you commit to, then the lower the price gets. And there's going to be other options. If you're like, I can't pay, $5,000, for a 10-hour time, I just can't do it. Then you don't need to, don't worry about that. But if really who this is for is like, if you're like, that's not a big deal. And I definitely want like somebody sitting with me to do it. Cause I don't, again, like you don't want to watch videos and follow step-by-step, like SOPs or anything. Like I just want to sit with you and like, maybe even I like control your screen too. And like, we just get it done. And I just talk to you through it. We're going to do it together. I'm not going to do it for you. It's like a done with you process. And that's like, you appreciate somebody sitting with me. I know we're going to get done. We have a scheduled time. We're going to crank this out. I'm not going to have to like interpret and figure out and go back and forth. We'll just get it done. If it's worth it to you, then this is for you. If you're like, no, I can't swing that. It's not really my style. I'm happy to just get SOPs and video lessons. Those are coming. Okay. And there's a really simple, the 10-day launch, very simple, very fast track, like really the point of the 10-day launch, which is not currently on the site. I can put it back. I will be putting it back on. I just have this part on right now. It's like, it actually is just putting blinders on and ignoring like 80% of the other stuff and just taking you straight through to like have an automated system running. It's like, so it's a real fast launch process, but not exhaustive or extensive in any way. So this is a big star that let me know where I was done with the presentation. So I'm going to go back and stop there. Any questions about automation? I'm going to go back to some slide that is. Yeah. Any questions about the systems we talked about, automation? If you want to unmute, you can just talk as well. Ian, do you want to just unmute and talk, or are you not in a place you can do that? Well, I'll start answering the question. TradeStation.
No, sorry, Andrew.
Yeah, go ahead. I can hear you.
No. From what you're saying, I do have. I mean, I have. I'm not as active because I'm sort of in my sort of pension years, but I do follow the markets very closely and have accounts at Interactive Brokers, TradeStation, and Schwab, which have now taken over Thinkorswim, which non-US people like myself couldn't use before. So, have really got now three different sort of platforms to look at. But from what you're saying, and I think from your previous course, TradeStation is the way to go. It sounds like.
Yes, I prefer TradeStation for an individual account, even if you have a couple of accounts. But it's like for an individual person with their own accounts, not like no friends and family structure, no like other people, no my cousin's account, etc. Like just you and your like 1, 2, or 3 accounts that you have at TradeStation. The one thing you won't get there that you can get with multi-charts that would still also be beneficial is the single portfolio trading. So multi-charts, which will connect to Interactive Brokers for you, you can just set up a single radar. You don't have to put a chart for every single symbol. You can just have like basically a radar screen, like a single list of symbols, and apply a strategy to that list, and it'll run all of them. So it's a more efficient way, but the only other challenge with that, like I have a bunch of symbols, I like TradeStation having all the different ones because they're all different time frames. Like I was explaining earlier, it's a lower price name, it'll be on a daily chart. If it's a higher priced, fast moving name, I'll go to an hourly. So that's one of the biggest trade-offs. If you're going to manage other people's money or lots of accounts for some reason, or you really like saying, hey, I want to put 500 symbols with all the same rules in this one portfolio, it's going to be way less setup time to get that done, and it's going to be less strain on the machine, much less likely to crash, which doesn't happen often anymore, just as computers get more and more powerful. So you're fine. Like TradeStation is going to work 95% of scenarios just fine. It's just those are the two things: managing other people's money or other accounts, family and friends, and the portfolio trader. Those are the two things. So how does that sound to you? Like how many accounts do you trade? Do you trade for family and friends or anything?
No, these are just multiple accounts that I've had over the years, as you're sort of testing different things, and I think from what you're saying, from my perspective, TradeStation is the simpler version for me.
Yep. Yeah. Good. Okay, Anthony, you sent me an email. That's great. And anyone else, feel free. This is a last minute call. I announced it 3 hours before the start, so I'm just glad a couple people jumped in. But fewer people means, it's easier for you to chime in.
One final question, Andrew, because you're talking about US stocks. One thing that's nice about TradeStation is that you can also, and I have got that now set up for commodities, which are more of a trending type instrument very often. Have you tested it on that side or not really?
I started doing it, but I haven't finished. There's just some elements of the sizing. You have to rewrite the code for futures because you need like the big point value and all that. So that's it. It works. It's just my code is not set up for it yet. But I wanted to do it I was going to do it on micro Bitcoin as just like, because then I have the after hours trading ability,
Yeah.
like, because it's more of a global name, not just a US stock. So yes, it absolutely works. I did a lot with oil in the past. It's been a long time, but there are plenty of good systems in oil, crude, CL, and yeah, so it works. You have to. I'm not a big futures market guy, and they are different, like you described, like the way they move. Um, you can in equities, you don't often see like smooth bearish trends. It's usually like anything bearish is kind of volatile and crazy because people are like in pain. Where in commodities, like you can just get like the most beautiful down trend that just like stair steps smoothly down for like 5 months straight, and you can capture that or sell rallies, etc. Um, so yeah,
Uh,
it's good. You
uh,
can,
and just one final comment to add about the simplicity of your system. One of my now departed friends, Robert Kraus, who was a sort of a market wizard type on the psychology side, but he had a very simple systems, and spoke to people like Ed Sakota, where they exchanged ideas. And Ed Sakota, who's a legend, had
yes,
very
yes,
simple systems based on moving averages. But Robert's friend Tom Hartle, who used to edit the technical stocks and commodities and went on to CQG, his favorite indicator was that line, the RSI 50.
oh
And
really?
so I think
Well, it
you're
is
on.
what it
So
is.